Welcome back, viewers. You're watching the Savera and I am Vidhi Joshi. Global investment bank Morgan Stanley has raised its Sensex target to 89,000 by June 2026, signaling an 8% upside from current levels. This revision reflects the firm's increased confidence in India's long-term growth story, supported by strong economic fundamentals and improved earnings outlook. Additionally, Morgan Stanley has upgraded its earnings per share estimates by nearly 1% following an upward revision in India's GDP growth forecast. Morgan Stanley is a global financial services firm headquartered in New York City. It was founded in 1935 and operates in over 41 countries, serving corporations, governments, institutions, and individuals. The firm specializes in investment banking, wealth management, asset management, and trading. Recently, Morgan Stanley upgraded India's growth forecast to 6.2% for financial year 2026 and 6.5% for financial year 2027, citing strong domestic demand and easing US-China trade tensions. The firm also expects the Sensex to reach 89,000 by June 2026 with an 8% upside potential. Morgan Stanley sees the recent decline in Indian stock markets from their September 2024 highs as a strong opportunity for long-term investors to enter the market. Despite global market ups and downs, India's solid economic fundamentals and steady company earnings make it an attractive investment destination. The pullback in stock prices creates value, especially for those focused on long-term growth. However, the firm notes that India is a low beta market, meaning it may not rise as quickly as other markets during a global rally. Still, Morgan Stanley has slightly increased its earning expectations by 1%, reflecting improved GDP growth forecasts. It has also revised its Sensex target to 89,000 by June 2026, up from its previous target of 82,000 for December 2025, indicating an expected 8% gain from current levels. According to the report, the Sensex is now expected to trade at a trailing price to earnings multiple of 23.5x higher than the 25-year average of 21x. This premium valuation reflects growing investors' confidence in India's stable policy environment and medium-term growth prospects. The brokerage firm highlighted several reasons behind India's resilience and potential. These include strong macro stability, declining primary deficit, low inflation volatility, and a robust domestic investment cycle. Annual earnings growth in the range of mid to high is expected over the next 3 to 5 years, driven by increasing private capex, healthier corporate balance sheets, and a surge in discretionary consumption. The report also noted that the Indian stock market has shown remarkable composure despite recent global events. Retail investors have continued to invest steadily, reinforcing the belief in India's structural growth story. Interestingly, foreign investor positioning is at its weakest level since 2000, but early signs indicate a shift in their outlook toward Indian equities. The Reserve Bank of India's dovish stance, stable oil prices, and consistent policy support further strengthen the sentiment. Morgan Stanley also praised India's recent geopolitical strategy, suggesting it has enhanced national security and global confidence in the country's governance. On the investment strategy front, the report suggests that this is likely to be a stock picker's market. The firm prefers domestic cyclical sectors over defensives with an overweight stance on financials, consumer discretionary, and industrials. That's all for now. Stay tuned to the Savera for more updates. Do like, comment, and subscribe to the channel.